Okay. So do you see my PowerPoint?
Yes.
Yes po.
Okay, so congratulations so far for making it at this point. No? We have been discussing the different taxation rules for different taxpayers. So, but generally, I have been repeating na dalawa lang naman yung taxpayers kung tutusin. So, individuals and corporations. Okay? But sa module na to, we're going to cover income tax on partnerships. So if I may ask you, ano sa tingin nyo ang partnerships? Tinatax ba siya as individuals or as corporations? Or it's entirely different from individual saka corporation? What do you think? Anyone who wants to share? So corporation. Okay. So depends, sabi ni Veronica. Okay. So others say corporation. Okay. So let me point out, at the outset. Generally, it's corporation. But in certain cases, yung rules for individuals may also apply. Okay? So parang it depends din, no? Pero, ganun lang yun, no? Either corporation lang or individual lang i-apply mo. So partnership is not going to be taxed na separate from individual sa corporation. Kasi dalawa lang naman ang taxpayer kung tutusin. Individual sa corporation. Okay? Commonly, it's mistaken kasi it's associated with the different forms of business. Kasi di ba, we have generally 3 forms of business. Sole proprietor, partnership, corporation. So don't carry that mindset in this subject. Okay? So in our tax code, the taxation for partnership is generally as a corporation. Okay? But we'll see when yung rules for individual taxpayers will apply. So we're going to cover the following. Ba't nawala? Okay, sige, diretso ko na pala to. The classification of partnerships, no? Okay, so for tax purposes. So number 1, we have what we call GPP, no? Or General Professional Partnerships. Then we have other partnerships. So itong other partnerships na to, ito yung ordinary or general co-partnerships. So ano nga ba ang ordinary na partnerships? Ang ordinary na partnership ay yung kanyang income ay derived from the conduct of trade or business. Okay? So let's say tayong dalawa, we pool our resources together. We form a partnership, tapos magtayo tayo ng merchandising business or a grocery, or a hardware. So yung mga ganong klaseng negosyo ay kino-consider siya na ordinary partnerships. Okay, so ang kanyang taxation is a form of corporation. No? So liable siya for corporate income tax. Okay? So ang binabayaran niya is the RCIP. No? Or kung higher, it should be the MCIT. So the rules that we have covered nung sa corporation. Okay? So subject to MCIT like a corporation. Tapos, pag nag-distribute siya ng profit sa mga partners, ang treatment, ang partners ay considered as stockholders. So the profit distribution is treated as dividends declaration. Okay? So the taxation for dividends will apply. So kasama din ang mga unregistered na mga joint ventures. and mga business partnerships. Sa taxation kasi class, kahit na hindi mo na-register yan, but if you are operating like a partnership, then the tax code will consider you as a partnership. Then therefore, you're taxable as a corporation. Okay? Kumbaga, it doesn't mean na hindi mo ni-register yung negosyo mo, hindi ka na liable for tax. So ang ating taxation sa Pilipinas, whether it's illegal or legal, kung may taxable dyan, ita-tax pa rin yan. That's on top of your penalties for not registering your business. Okay? Okay, ang GPP is very unique and very specific. So, professional partnerships ito. So, this is solely for the purpose of exercising common profession. So, kadalasan, sa mga accountants, mga CPAs, we set up a practice. Bawal kasi ang corporation doon. So, partnership, yun, no? At kino-consider yun na GPP. Okay? So, we derive income from exercising accountancy profession. Same goes for lawyers and other professionals. No? Okay, so notice, pag GPP, they have no income derived from engaging in trade or business. So otherwise, it will not be considered as a GPP. So pag GPP talagang yung income ng partnership na to is only derived from the exercise of their profession. Okay? So ang GPP ay hindi siya subject to tax. Okay? But it's only acting, no, as a pass-through where its income is ultimately taxed to the partners comprising it. So therefore, sa dalawang partnerships na kinover natin, yung ordinary partnership, taxable siya as a corporation. Pero yung GPP is exempt. Okay? So yun lang yun, no? Dalawa lang naman ang partnerships, ordinary and GPP. So ordinary partnerships are taxable as a corporation. But GPP is exempt from income tax. Okay? However, pag GPP ka, pag-distribute mo ng profit, ita-tax yung dinistribute na profit doon mismo sa partner. Dito papasok yung rule ng individual. So therefore, the GPP itself is exempt from income tax. But the income derived by the GPP and distributed to the partners is taxable to the partners in their individual capacity. So papasok pa rin yung rule ng individual taxpayers sa topic na to. Pero doon sa partners in their individual capacity, comprising the GPP. Okay? So to properly address yung question na ni-raise ko kanina before we started discussing the module. So ang partnership is taxed like a corporation. Okay? So isipin nyo, partnership is taxed like a corporation. Okay? But except for GPP, which is exempt from income tax. Okay? The profit distributed will be taxed ultimately, pero doon na sa mga owners or partners comprising the GPP in their individual capacity. Are we clear so far?
Yes.
Or we continue? So I just laid down the foundational tax rules for partnership. So you have to understand yung mga nasabi ko, and the rest of the topic will just, be a piece of cake, kumbaga. No? We'll just revolve around yung rules na mga sinabi ko so far. Uulitin lang natin. Okay? So sa GPP, ang income tax ay nandun sa mga partners in their individual capacity. No? So partners are liable for income tax on their distributive share only in their separate and individual capacities. So, okay? Each partner, therefore, shall report his distributive share actually or constructively received in the net income of the partnership as part ng kanyang gross income. Kaya kung yung partner, meron pa siyang ibang income besides yung income derived from the GPP. So, i-consolidate niya yun at ita-tax niya, okay, sa kanya as individual taxpayer. Okay? So, the share of the partner ay subject sa creditable withholding tax. So, 10% if it is not more than 750,000 and 15% if it is more. So, ang mangyayari pala, bago ibigay ng tuluyan ni GPP sa mga partners yung kanilang share sa profit, i-withhold muna ng tax. Okay? So, kunwari, may share si partner A sa GPP na 100,000. So, ang ibabayad lang sa kanya is 90,000 because the 10%, which is 10,000, will be withheld by the GPP. And the GPP will remit the 10,000 to BIR. Di ba ganun ang rules sa withholding tax? The withholding agent, which is the GPP, will be remitting it to the BIR. Okay? Pero dahil creditable yun, hindi pa final yun. Remember, there are two kinds of withholding taxes, final and creditable. This is not final, only creditable. So kung ikaw yung partner na yun, sa ITR mo, yung 100,000, i-reflect mo pa rin as part of your income. 100,000 yung i-reflect mo. No? So together with your other income, isasama mo yun. So let's say, after doing all the computations, may tax due ka na, let's say, 50,000. So yung 50,000, pwede mong bawasan ng 10K or 10,000 yung creditable na withholding tax. Okay? So ang babayaran mo na lang sa BIR by April 15, no? So sa deadline ng ITR is 40,000 na lang because you can claim the creditable withholding tax of 10,000 as a tax credit. So out of your due na 50,000, your payable that remains is 40,000. Are we clear with the process? Okay. How are you, class? Did you follow the process?
Yes po, yes po.
Okay. So hindi siya katulad ng ng dividend sa mga corporations talaga kasi pag doon final withholding tax yung withholding sa dividends. And remember, pag final, it's not anymore declared sa ITR. Okay? Yung income. Okay, so yeah. Individual partners are subject to the regular income tax. So therefore, ito yung graduated na income tax rate. No? So remember the graduated income tax rate. So if the partnership sustains a net operating loss, the partners are entitled to deduct yung kanilang respective share sa loss from their individual gross income. Okay, in case of loss. No? Okay, so ang pag-compute ng kanyang net income is same manner as a corporation. Okay, ordinary and necessary expenses are allowed as deduction. Yung sales minus direct cost. Okay. then you have gross income, then you have allowable deductions. Yan. So, taxable income. No? Okay? So, ganyan ang pag-compute sa taxation. Okay? Ang advice ko, as I told you before, medyo wag niyong gamitin yung natutunan niyo sa financial accounting dito kasi taxation has its own rules. Okay? So, yan. Although may similarity, but you'll see the difference talaga nito sa mga susunod pa na modules natin when we discuss gross income and allowable deductions. Okay? So, ganyan din ang pag-compute sa GPP. Para lang din siyang corporation. Yan, okay? So, yan, individual partner can claim deductions incurred or paid by him. Okay? So, if GPP avails of OSD, I hope naalala niyo pang ibig sabihin ng OSD. Ang ibig sabihin ay optional standard deduction. Don't worry, if you don't know the intricacies pa ng OSD, we'll have separate module for that. Yung tungkol sa mga allowable deductions. Take note that I use the term allowable deductions rather than expenses because there may be expenses for financial accounting na you deduct from your gross income, but they're not allowed to be deducted when you compute for taxable income. Okay? So, yeah. Okay, so kung inabail daw ang OSD, the partners comprising it can no longer claim further deduction kasi yun na yun, no? Otherwise madodoble yung deduction. So if GPP availed of itemized deduction, yung mga partners cannot claim the expense, the same expenses already claimed by GPP. Kasi madodoble nga yung deduction. No? So they're not allowed to claim any more OSD doon sa share ng income na yun. So ang tatandaan nyo lang dyan, bawal yung double deduction. Okay, so if the partner also derives other income from trade or business or practice of profession, apart and distinct doon sa share niya sa net income ng GPP. So the deduction that can be claimed from the other income would either be itemized deduction or OSD. Kumbaga, yung income mo doon sa iba, compute mo ng hiwalay, then yung income mo dito sa GPP, then saka mo nilang i-consolidate. No? Okay, that's the rule. Let's illustrate para mas malinaw. First illustration is the comparison between ordinary partnership and GPP. So we have ordinary partnership sa left side and GPP sa right side. Okay? So gross income, so that's 3 million. Allowable deduction, 2 million. So taxable income is 1 million pesos. As you can see, subject to tax na 20%, hindi siya 25 dahil hindi naman lumagpas ng 5 million ang taxable income. Okay? So, yan. So, net income after tax is 800,000. So, that's for ordinary partnership. So, para lang siyang corporation. Sa GPP, so we have gross income, allowable deduction. So this is the taxable income. How much do you think is the income tax dito sa part na to? Anyone? I don't know kung nasa handouts niyo ba to or doon sa PowerPoint ko binigay ito. So, correct everyone? The answer is 0 because exempt from income tax yung GPP. Unlike ordinary partnership, it's taxed like a corporation. So ang income after tax na distributable to partners sa GPP is 1 million pesos. Okay? So sa ordinary partnership, nagbayad siya ng RCET na yan, 200,000. Mas malaki yan sa MCIT. Let's say the MCIT is 60,000. 2% nitong 3 million. Okay? Therefore, kaya ang income tax dito, the higher, which is 200,000. Yung 800,000, kunwari ito yung partners. These are the partners. Yan. Partners A, B, C, and D. Pag dinistribute itong profit na to sa kanila, okay? Merong final withholding tax yan sa dividend. Okay? 10%. So ang less itong 20,000 ang ma-receive ng each partner dito would be 180,000. Kung ikaw ay si partner A dito, sa ordinary partnership, ito bang dividend income mo na 200,000, i-declare mo pa sa ITR mo? Anyone? Let's say you are partner A and you earn dividend income of 200,000 from the ordinary partnership. Are you still going to declare that sa ITR mo? Anyone? So what's the nature of the 10% withholding tax dito? So Veronica, that's correct, no? The nature is final withholding tax yun. Okay, so therefore, yung 200,000 dividend income, hindi na kailangan, hindi na dinideclare sa ITR. Okay? Yung 20,000 na winitheld sa'yo, that constitutes full and final payment. Pero syempre, yung partnership ang magre-remit niyan sa BIR. At pag hindi ni-remit yan, ang hahabulin ng BIR, yung partnership. Hindi ikaw na partner. Kasi what has been withheld to you was already final withholding. No? So ganun siya, okay? So that's for ordinary partnership. That's how corporations also work. No? Now, dito sa GPP, so 1 million ang net income nila kasi exempt from income tax. So paghahatian nila yung apat. So partner A, B, C, D. No? So lalabas, tig to 250 sila. So kung napansin mo, wala siyang withholding tax. Sorry, sa illustration. Pero I told you kanina na dapat meron, di ba? Dahil hindi naman lumagpas ng... Sorry. Pakita ko na lang ulit. Okay, so hindi naman siya lumagpas ng 720. So may creditable withholding tax na 10% also. No? Kaya lang, are you still going to declare ba itong 250 na to sa ITR mo? Kung ikaw si partner A, for example, dito sa GPP. What's your answer? So the answer is yes. Okay? Then if you have other income from other sources, then you combine them, you compute the tax due entirely for the entire amount. Then whatever that may be, yung 25,000, which is 10% nitong 250, na withheld sa'yo yun, pero creditable lang yun. So, pwede mong i-claim yun na tax credit. Okay? So, that's the system of taxation dito sa GPP. Okay? Now, remember the 8%? Okay, dun sa individuals. Bawal gamitin ang 8%. Partners are not allowed to avail of the 10% preferential tax rate. So their distributed share from the GPP is already net kasi ng cost and expenses. Kung naalala nyo, ang 8% na yan, pinumultiply yan dun sa revenue mismo. Di ba? So therefore, in this case, na-minusan na kasi yung share mo ng expenses, hindi na siya pwedeng gamitin yung 8%. Okay? Now, let's illustrate further yung taxation sa GPP. So, this time using 40% optional standard deduction. So, Mr. JMLH is a partner of AMBS and Company, a GPP, General Professional Partnership, and owns 25% interest. So, yung gross receipts ay 10 million pesos for the taxable year 2018. Cost of service, ito yung direct cost. That's 2.75 million. Tapos merong operating expenses amounting to 1.5 million. Now, kung yung partnership, the GPP, availed of the OSD, optional standard deduction, this is allowable deduction. Okay? Yan. Huh? So, ito yung computation ng kanyang net income. So, gross receipts, 10 million. Ito yun. Cost of service ay 2.75 million. Okay, so gross income, therefore, is 7,250,000. Ang pinili niya ay OSD. So instead of using the 1.5 million allowable deduction, itong operating expenses, ang ginamit niya yung 40% na OSD. So that's 40% of gross income. So instead na yan, ang allowable deduction is OSD of 2.9 million. So don't be bothered nung OSD, no? Kasi again, we'll have a separate discussion for that sa separate module, okay? So therefore, yung net income ay 4.35 million. Kung napansin nyo, this is already the distributable amount. Wala ng income tax deduction dahil this is a GPP. And therefore, it is exempt from income tax. Okay? So there is no income tax liability ng partnership since it's a GPP. So the GPP elected OSD in the computation of net income, and that's irrevocable for that year in which the return is made. So GPP is liable to business tax, pero hindi to covered ng subject natin ngayong semester. Income tax pa lang tayo. No? So, ang income tax liability ni Mr. JMLH, the partner, so ang share niya, di ba, 25% out of the 4.35 million. That's 1,087,500. So how are you going to compute income tax out of this amount? Na 1,087,500. How are you going to compute income tax on this shares of profit ni partner JMLH? Kaninong tax rule yung gagamitin mo? Sa corporation or sa individual? So, very good, no? Very good. Veronica, Johnny, London, so the rest, no, Charlie? You'll use individual, very good. Okay, so you're gonna use the graduated tax rates, and the computation is already here. The tax is 216,250 on the shares of profit ng partner amounting to 1,087,500. Okay? So the partner is not allowed anymore to claim further deduction dito sa 1,087,500. Kasi already naka-net na yan ang cost and expenses. Tinax agad natin tong 1 million income na to. No more deduction from it kasi nadidakan na yun dati. Doing so would mean double deduction, no? And that's not allowed under tax rules. Okay? So the taxpayer also is not allowed to claim 8% income tax rate option dahil net na nga ng cost and expenses itong 1,087,500. And remember that this 8% is a form of gross income tax. But the 1,087,000 is already the net income. Okay? So 8% is not allowed. So another illustration, which is very similar to the previous one. So you can easily relate to this one. So ito yung partner. Yan, so isang partnership, which is also a GPP. 25% also yung kanyang interest. Gross income, gross receipts rather, not gross income. Gross receipts ay 10 million. Cost of service, which is direct cost, 2.75 million. So dinidak siya. Gross income is 7.25 million. Then merong operating expenses. Ito yung itemized. And in this illustration, ito yung pinili. Rather than OSD. Ang default na allowable deduction is is yung itemized deduction. For you to use the OSD, you have to declare it sa ITR mo. If you don't, then you are going to use the allowable deduction. Okay? So net income, therefore, is 5.75 million. So just to reiterate, no more income tax deduction dito. Kasi the partnership is a GPP, and that is exempt from income tax. So in this case, the GPP elected itemized deduction in the computation of its net income. And it's also irrevocable for the taxable year for which the return is made. Okay, so GPP is also liable to business tax. But next semester na to. Okay, the income tax liability of the partner will be computed as follows. Ang share niya dun sa partnership profit na 5.75 million is 25%. That's amounting to 1.4 million. And using the graduated tax rate, ito yung kanyang income tax. So use the graduated tax rate because individual siya. And it's not allowed na bawasan pa to yung 1.4 million ng further expenses kasi net amount na to. And again, bawal gamitin yung 8% kasi that's gross income tax rate. But the shares of profit is also is already net amount. Okay? Now, GPP for compliance requirements. GPP itself is required to file ITR. So, just a checkpoint question para malaman ko kung nakakasunod kayo. Required ba mag-file ng ITR ang GPP? Yes or no? Very good, no? The answer is yes. Pero how much income tax will the GPP pay sa BIR once the GPP files ITR? Magkano babayaran niya ng income tax? Kasi magpa-file siya ng ITR, yung GPP. Very good, very good. The answer is 0 because the GPP is exempt. The filing of ITR ni GPP is only for compliance purposes. And it's for monitoring lang ng BIR. Okay? So magpa-file siya pero ang nakalagay dun sa return, exempt kasi GPP siya. Okay? So the share of the individual partner in the profit ng GPP is deemed received whether actually distributed or not. Ang tawag dyan, kung hindi mo distribute, constructively received. So as far as BIR is concerned, yung share mo sa profit dun sa GPP, taxable na yun. Okay? Taxable na yun. Whether distributed or not. Okay? So, yan yung compliance requirements for GPP. Now let's talk about joint venture and consortium. Okay, the taxability ng joint venture and consortium. Okay? Ang kanilang taxation is in the form of corporation. Kasi parang, isipin nyo class, ang mga joint ventures at mga consortium, parang partnership lang din yan. Then, ordinarily, therefore, they should be taxed as an ordinary partnership. And the taxation for ordinary partnership is like a corporation. Okay? Kahit na hindi siya incorporated. Remember, sabi ko sa inyo kanina, pag partnership yan, kahit hindi mo yan register sa SEC, but if you operate that way, BIR will consider you as a corporation and would tax pa rin yung income mo dyan. No? Rightly so. Correct lang yun kasi not because hindi ka nag-register, hindi ka na liable for income tax. So for me, all the more pa nga na dapat liable ka because meron ka na kagad non-compliance. No? So share of the joint venture partners will no longer be taxable to them because they partake of dividends. Okay? At anong tawag sa withholding tax na winidheld dito sa dividends? Sa mga sa dividends na dinideclare ng ordinary corporations. Anong tawag sa withholding ngayon? So very good, no? Final withholding tax. So therefore, yung joint venture partners, whatever they have received from the joint venture is already na-tax na yun, final and fully paid. So hindi na yun kailangan i-declare pa sa ITR. So remember, joint ventures, consortiums, they're essentially partnerships. And partnerships ordinarily are taxed as corporations. Okay? So what do you think sa GPP pagdating sa mga partnerships? Ano ang GPP? Is GPP the rule or the exception? In other words, anong treatment mo sa partnerships normally? Ordinary partnerships or GPP? Ordinary. So corporations, no? So usually, pag partnership yan, ang isipin mo, corporation yung taxation yan. Ordinary yan eh. Okay? And the same goes for joint ventures and consortiums. The same thing goes for joint ventures and consortiums. No? Okay? GPP is not the rule. Okay? It's the exception. No? So ordinarily, partnerships are ordinary partnerships. Therefore, corporations. Taxable, therefore. Okay? Except kung talagang GPP siya, for the exercise of common profession, then only then you treat that as a GPP. And therefore, it's exempt from income tax. Okay? Now, may mga joint venture consortium na exempt. Okay, so look at the pictures that I used dito. I hope they have, some bearing dito sa discussion. Normally, ang treatment mo sa mga joint venture consortium, they are taxable as corporations. They are taxable as corporations. However, merong dalawa na joint venture consortium na exempt. Therefore, hindi sila taxable as corporations. Kung yung kanilang purpose ay for undertaking construction projects. Okay? Construction projects. Let's say yung construction ng railway, ng building. Okay, so mga ganong projects. No? And the other one is if it is involved in petroleum, coal, and other energy operation under a service contract with the government. Ito number 2 madali lang kasi ang may nag-govern naman na contract dito. And this is very rare, kumbaga. It's not just you want na magkaroon ng gantong operation. Meron pang government approval yan. No? So let's focus on number 1 na lang. Okay, illustrate ko siya sa inyo. No? Joint venture partners are taxed in their respective shares in the income of the joint ventures. Kasi yung joint venture is exempt. Okay, so kung yung joint venture ay exempt, pag-distribute ng profit nun sa mga partners, the partners will be taxed on their own or in their individual capacities. No? So let me illustrate. Joint venture consortium. Weber Realty Company, yan, no? Which owns a 3-hectare land in Antipolo, entered into a joint venture agreement with Prime Development Company. So who are the joint venture partners? Weber Realty and Prime Development. Yeah. So for the development of the said parcel of land. So Weber Realty, as owner of the land, contributed the land to the joint venture. Okay, and Prime Development agreed to develop the same into a what? Subdivision, residential. And they're going to construct residential houses thereon. They agreed that they would divide the lots between them. So alin siya dito sa dalawa? Nagpo-fall ba siya dito sa number 1? Yes or no? So correct. So yung joint venture that they have formed is exempt. So yung joint venture na yon, kung meron mang kikitain yon, hindi yun taxable. Sino ang taxable in this situation? The joint venture partners, Weber Realty and Prime Development, but in their individual capacities. But I'm not saying that they are individuals, they are corporations, no? Ang taxation mo sa kanila, because company yan, in their own corporate identity. Yeah, okay? So, yeah. So the first question, does the joint venture agreement entered into by and between Weber and Prime create separate taxable entity? The second question, are the allocation and distribution of saleable lots, kumbaga pag na-develop na, hahati-hatiin nila. Okay? Pag naghati-hatian ba sila, allocate, distribute, subject na ba to income tax and withholding? Pangatlo, is the sale by Weber or Prime of their respective shares in the saleable lots to third parties subject to income tax and to EWT, or expanded withholding tax? So first question, yung joint venture agreement ba na pinasok nila is a separate taxable entity? What's your answer? Okay, let's find out. The answer is, yeah, does not create a separate taxable entity. So kung in reality, yung joint venture agreement, kukuhanan mo pa ba ng ITR yun sa BIR? Kukuhanan mo ba ng PIN sa BIR yun? I-register mo pa ba siya sa BIR? The answer is no, because it is not a separate taxable entity. Because the purpose is for undertaking construction projects, which is yung subdivision, di ba? Hence, it is not considered as a corporation for income tax purposes. Second question, are the allocation and distribution of saleable lots, kumbaga class, ito na, natapos na yung construction. Kunwari, naka-construct sila ng 100 units ng house and lot. Hinati nila ngayon. 50-50 sila. Okay? So 50 na, nahati na. Okay? So 50 kay Weber and the other one 50. So hindi pa nabenta sa third party, ha? Hindi pa nabenta sa mga buyers. Naghatian pa lang sila, natapos na yung construction. Taxable na ba or hindi pa? Very good, very good. Okay? So hindi pa kasi wala pa namang na-realize na income, no? So the allocation and distribution, parang binalik lang naman yung capital nila, eh. Okay? At wala pang na-realize na income doon. Okay? So based on the BIR ruling noong 2011. And talagang tama naman na gano'n, no? Na hindi siya taxable. So wala pa namang realization ng income. Okay? Paano kung may sale na sa third parties? Taxable na ba or not yet pa rin? Very good. Okay, very good. So this time, taxable na yun. Okay? Subject to income tax na. And it will be subject to tax the normal manner. No? Okay? So, yun siya. So in this illustration, ilan ang taxpayers? Weber, Prime, joint venture agreement. Ang sagot, very good, dalawa lang. Si Weber lang at si Prime. Okay? Baguhin ko class ang situation para mas maintindihan nyo. What if the purpose of the joint venture agreement is for trading of textile and garments? Ito yung marami dyan sa Taytay, no? So kunwari, nag-joint venture sila kasi etong si isa, may warehouse dyan sa Taytay, itong kabila naman may contact sa China. And they're going to import textile and garments from China, and they'll store and distribute in Taytay. No? So they formed the joint venture agreement. Pag ganun ang situation, how many taxpayers would be in the case? One, okay. Pero kumpletuhin natin. Kasi kanina, dun sa construction project, dalawa, di ba? Weber and Prime. Gawin natin ano dito, tatlo. Taxpayer pa rin naman si Weber tapos si Prime. Okay? But this time, taxpayer din yung joint venture agreement. Yun nga lang, separate siya na corporation. And therefore, pag nag-distribute ng dividends, yung joint venture agreement, isa subject na yun sa final withholding tax. Okay? So, ganun siya. But it's not anymore going to be declared as income ni Weber at ni Prime. Kasi na-subject na sa final withholding tax yung dividends. But for illustration purposes, tatlo pa rin silang taxpayers. Okay? Just to highlight the point. No? Okay, so yeah. So that's the end of this module. Okay. We will discuss module number 7 later. No? So we'll take a break first. let's have, let's resume at 10.